This episode of the Accounting Insiders podcast is brought to you in part by Xero. Xero is a powerful cloud accounting software that improves efficiencies across your practice. With all client data stored on a single unified ledger, you and your clients can easily access and collaborate on the same set of books. Xero's advisor tools and automation solutions reduce time-consuming manual tasks and put data entry on autopilot. Work faster and more efficiently than ever before with Xero. Visit Xero.com/accounting insiders to learn more. Hello, and welcome to another episode of the Accounting Insiders podcast. My name is Gary DeHart, and I am the host of Accounting Insiders podcast and the publisher of Insightful Accountant and Tax Practice News. My guest today is Emily Fish, who is the Director of Product Accounting for LeaseQuery. Emily, welcome. Thanks for taking a little bit of time having a conversation today.
Of course. Thanks for inviting me.
Absolutely. I'm in the Atlanta, Georgia area, Johns Creek specifically, and you are located in?
I'm in Fort Worth, but LeaseQuery is headquartered in Atlanta.
Okay, so that's right. Not too far from me. Now, are you from Fort Worth? Always, forever been there?
No. I've lived all over.
Okay.
Yes. I went to high school in DC, graduated from college in Kansas. Like I said, all over.
Yeah. I haven't made it too far. Grew up in Middle Georgia and moved to Atlanta in like 86, I guess, to finish up college. Had a great 2.5 years at University of Georgia, and then I had to get an education and go to, so I finished up at Georgia State, which was a great school, but then it was a commuter school. And so, but it was still like a 20,000 student body, but it was 100% commuter, no dorms, no anything.
Interesting.
Completely different. Yeah, it's completely different now. And so, tell us, just give me a little bit of background about you,
Sure.
what you do, and then touch on, LeaseQuery on the company, what you guys do, and then we'll just get into our conversation.
Yeah. So like you mentioned, I'm the Director of Product Accounting at LeaseQuery. I've been here for about 3.5 years. And as Director of Product Accounting, I'm responsible for making sure our software performs all of the calculations it needs to, and does so accurately to produce reliable financial statements for our customers. Also at LeaseQuery, I helped to launch our podcast, Accountant's Angle. So I'm more accustomed to being on your side of the microphone, Gary.
Okay.
But prior to my time at LeaseQuery, I was the Senior Manager of Lease Accounting Audit and Admin at Pier 1 Imports before they closed. And while there, I implemented new lease accounting software and transitioned the company from ASC 840 to ASC 842.
All right. And is that like, how many locations did they have at the end there when you worked there?
Well, when I started in lease accounting, we had about 1,052. And then, at the end, 0.
So. Right. Sure. Well, I guess that makes sense, right?
Right.
And so, and now we're getting way off topic. This was not on our cheat sheet, but just for because I don't know how this works. So, so in lease accounting, so you had 1,000, plus locations. Each one of those is a separate file, so to speak, for the company as far as from a lease perspective.
Yes.
Okay.
Yep.
That's what I assumed, but I don't want to make any assumptions.
Yeah, right? No. So we had to, transition the accounting for each and every single one. And that was just our store locations. We also had distribution centers across the country and Canada, and our home office in Fort Worth. Okay.
And so you went from accounting to product, but still accounting focused in product, right?
Yeah, so it was really a unique segue. When I had been connected to some of the leadership of LeaseQuery through LinkedIn throughout my time at Pier 1. And then I posted a message on LinkedIn saying like, hey, there's a bunch of us about to be out of a job, and here are our skill sets, and here are the people you should call. And then I got a call out of that from LeaseQuery saying, hey, we love what you do, and you have the right skill set, and this is, you're a subject matter expert in this, and this is what we need. Come work for us. So that's how I got here.
That's fantastic. So it's what you knew, but also who you knew.
A little bit, yeah.
It always helps, right? Now, so in that role that you have now, do you travel? I mean, do you go to trade shows and interact with people, or are you more really?
I'm more home-based here in Fort Worth, in my home, actually. Yeah. I do travel to the office from time to time, but I don't generally participate in the public speaking engagements unless they are local.
Gotcha. Gotcha. All right. So the few topics we said we were going to talk about: trends in financial reporting, and we're talking about changes in the lease standards, and then a little bit more just on the company itself, because you said
Yeah,
there's a few things that are in the pipeline too.
sure.
So let's touch on the trends in financial reporting. What's out there? What are you seeing? What do advisors need to be prepared for?
Yeah. So I think the overarching theme in financial reporting, and I don't think this is anything new, but it's a desire for increased transparency, right? Stakeholders have found ways through formulas and poring over and interpreting notes and financial statements to suss out the key metrics they need. But to assist with ease of use and comparability, the focus of the various standard setters has been and continues to be to find ways to paint a clearer, more perspicuous view of financial health of an entity. We saw this with 606 revenue recognition, and definitely with ASC 842 leases. So to that end, we've seen recent pronouncements and proposals that really hone in on making information more readily available and digestible. With ESG reporting, investors, customers, and regulators are increasingly demanding transparency on a company's sustainability practices and social impact, right? Stakeholders want to know that companies are not only good stewards of financial capital, but also of natural and social capital, and have the necessary governance framework in place to support it. With the current proposal for income statement disaggregation disclosures, the FASB is aiming to address requests from investors for more detailed information about the types of expenses commonly presented in like cost of sales and SG&A and R&D, like these big buckets, right? So the additional disclosure requirements would enable investors to better understand the entity's performance, evaluate the entity's prospects related to future cash flows, and compare an entity's performance over time. At the end of the day, it's all about transparency.
And who does that primarily impact? And when I say who, like what size of businesses are primarily impacted with these?
Yeah, so the majority of these trends are going to impact public companies. When we think of transparency in financial reporting, we don't necessarily think of entities like, my husband's consulting company or the daycare your children attend, right? We think of Fortune 500 companies and shareholders and 10Ks and, Enron of the early aughts, right? So while anyone can benefit from increased transparency in financial reporting, requirements like ESG and DICE would place an undue burden on small companies and nonprofit organizations because they most likely don't have the resources to complete such an undertaking. And at the end of the day, who are the users of these financial statements? Banks and lenders, most likely. And are they interested in ESG, or are they interested in whether or not you can pay back your loan? Right. So I think what made 606 and 842 different in that respect is the changes from these standards, in some instances had a dramatic impact on the balance sheet. Take, for example, 842. Under 840, operating leases were primarily disclosed off the balance sheet and in the footnotes to the financial statement. So in other words, they weren't listed anywhere. When I transitioned from 840 to 842 at Pier 1, I brought $696 million onto the balance sheet. So talk about transparency, right? Like this has a direct impact on meeting future obligations.
Absolutely. And that, and when was that? That was,
so,
I read it, but I can't recall.
Yeah, all of the new lease standards are now in effect. ASC 842 was effective for public companies in 2019, as was IFRS 16. Adoption for private companies was set to be shortly thereafter, but delayed due to COVID. So ASC 842 was not effective for private entities until 2022. GASB 87 was effective for governmental entities in July 2021. And SFAS 54 just took effect in October 2023 for the federal government, but they're all the same thing.
Okay. And there will be a test on all of these dates. So make sure,
right?
If anybody listening, make sure
I get tested.
that was pretty good, actually. Oh, yes. So again, showing my kind of lack of knowledge around that. That's just not something that we get into typically. I'm sure that our customer base, or at least our reader base, a percentage of our readers certainly have their hands involved in some of this.
Of course. But I mean,
yeah.
When you talk about the impact that these standards have, I mean, literally anyone who has a lease is impacted by these new standards, right? Arguments can be made for materiality thresholds and whether or not something meets the definition of a lease. But in general, if you're making a recurring payment for the right to use an asset, you have a lease, recognizing the right of use asset and lease liability on your balance sheet.
And that does include, I don't know if you said this when we were live or if you said it before, that does include SaaS as well?
Yeah.
Okay.
Yep. Well, so for
yes, maybe.
Right. It's that gray area that we accountants love so much.
Right.
The GASB has a pronouncement, GASB 96, for subscription-based IT arrangements, also known as SPIDAs. But on the FASB side, it's more under cloud computing arrangements and SaaS spend. There aren't really any lease disclosures related to that.
Okay. So all right, so you said it really probably likely going to target more of a medium to large size company. Yeah. Not exclusively public, but that's really but probably the majority public. Is that what you're seeing?
I would see the majority of public companies for things like ESG and DICE, right? But for leases, I mean, that affects everyone. The majority of our customers are private companies.
Okay. And then how about again, our audience is primarily the small, mid-sized business advisor.
Sure.
How did they turn this topic into a profit center? And I know accountants don't like to talk about profit or making money, but we're all in business. Well, most of us are in business to make money, and this is an opportunity in my eyes for accounting professionals to step in and say, hey, whether they can put a dollar to it or not, I would think they could, because it's knowledge, right?
Right. So in one word, specialize, right? Okay. Get really explicitly clear on certain parts of accounting and own it. Become the subject matter expert on the next thing. Unless your client has a whole team of people in the accounting department, the people who are doing the job on a daily basis oftentimes don't have the bandwidth to take on the additional responsibility of learning the intricacies of a new accounting pronouncement. I was very fortunate during my time at Pier 1 to have a manager who was incredibly skilled at her job, shout out Sandy Purdue, and was able to own the daily operations of my team so that I could focus solely on 842. But, if their clients don't, they can benefit from being the SME and offering that unique skill set to get their clients over the finish line.
So how do they identify who their best target clients are? I mean, I imagine if you're a one location business, is there much of an opportunity for an advisor to provide guidance and direction?
Yeah, for sure.
Is there? Okay.
For sure. Right. As an accounting software provider, there is a small aspect of what we do that is an advisory capacity, right? But it's more about how we take your information and put it into our software so that you get the desired outcome, right? It's not necessarily, we can't advise you on how to calculate your incremental borrowing rate to discount your lease payments, right? We can't give you those kind of pieces. So in that advisory capacity, understanding your clients, understanding their business needs, and having the relationships to know what pieces of these changes are important and impactful to them.
Right. And then being able to articulate it, right?
Of course. I think, change in general requires a lot of thought and planning. And building a roadmap to success with key metrics and decision points is really helpful. When you make sweeping changes like this, there are a lot of small details that can be overlooked. Things like, I have to create a new account for this new activity. And, will the way I go about reconciling this account still make sense after this change is made? And so advisors, assuming they've been through major change before, can guide their clients by giving them a direct line of sight to those smaller details, the things that may get overlooked. So while it's not really reasonable to think we'd be able to build like a highly detailed playbook complete with every decision needing to be made or consideration to factor in, when implementing a broad change, we can ask the questions that provoke thought. We can say, I see you're doing X. What does that mean for Y? Or have you considered A, B, C within this workflow? Or who's going to be in charge of this part of this action, right? Like,
right.
We can ask the questions to provoke thought, not necessarily lead them down a certain path.
Okay. Can we get a little more detail on the changes in accounting lease standards or accounting standards?
Yeah.
And so we already talked a little bit about when it went into effect. I almost want to test you on those dates again, just to see if you could run through those again, but I won't.
Okay.
So the kind of the what of it, I think you already touched on, and it was primarily for, or I guess the why would be transparency.
Right. Yeah. No, 100% transparency. Having all of those operating leases off balance sheet didn't really provide a holistic view of a company's and entities, ability to meet future obligations. So the changes to the lease standards are mostly balance sheet activity. At a very high level, the main change is that the operating leases are now presented on the balance sheet as a liability with a corresponding right of use asset. So as I mentioned before, they were previously disclosed in a footnote. And so that's primarily operating leases. Accounting for capital leases, now called finance leases, remains the same. Nothing has changed for them. But I think also a piece that some people miss is the income statement perspective. If you had been recording rent expense correctly under the prior standards, you had been straightlining your rent expense, right? So there was no front loading all the expense to have zero in the end and beef up the way your income statement looked. However, through implementation and seeing companies transition, we've seen quite a few companies who are using cash basis to record their rent expense each period. And we know under the prior standards that was not the best practice, but the new calculations under the new standards prevent that treatment altogether. So people are getting their income statement in line while having this adjustment to the balance sheet. That said, it should just be a balance sheet activity.
Okay. And so we talked about the kind of how advisors can guide their clients. And I really like what you said about specializing, really diving in. So, so if I decided, okay, I'm going to dive in, well, actually, before I back up, let me back up before I ask that question. Is this an opportunity? Again, because as I shared before, we're about our audience is about 30% bookkeepers. Is this an opportunity for bookkeepers, or do I need to have CPA behind my name for this really to be an opportunity for me as an advisor?
No, I think it's an opportunity for everyone.
Okay.
Everyone is looking for help with this.
Okay.
It's a significant undertaking. We at Pier 1 had a very centralized contract system, procurements, leases, everything that we rented. And it still took us the better part of a year to implement this new standard.
Okay. And so if I wanted to specialize, let's say I'm a book, well, whatever, whether I have letters behind my name or not, if I want to specialize in this, where do I go? What am I reading? What do how am I able to rattle off all three of those dates off the top of my head and make it sound right?
Yeah. Like, so each of the big four firms have their own guide for the leases standard. Whichever one you prefer, like there's pros and cons to each. But you can select one. And I don't suggest anyone just sit down and read it, because that's no fun. Right. But there are podcasts such as this. There are webinars. There are, courses you can take specifically on leases, specifically on various topics to become subject matter experts. The education opportunities are out there. Right. The LeaseQuery website has blogs, webinars. You can talk to somebody with our chat. Like, we have a lot of different resources available to users.
Okay. Well, great. And what's your podcast? What's it called?
Accountant's Angle.
Accountant's Angle. And it's primarily focused around lease accounting, or you cover multiple topics?
We cover multiple topics. We started with lease accounting, helping our customers transition, but now we have expanded our reach, and we talk about SaaS spend management, financial contracts, just different things to be on the lookout for.
Okay, well, great. Well, let's talk a little bit about, before we wrap up, about LeaseQuery and what LeaseQuery is, and let's give me the whole background. We'll hit you with some dates again on that one. So when did they start? And now, what's just high level on LeaseQuery? What is it? Although, how long has it been around? Sure. What did it start as, and what has it become? And what will it be looking out in the future?
So our CEO and founder, George Ozzie, saw the lease accounting pronouncement coming. And he said, oh, hey, I should capitalize on this and build something. He is a CPA. Okay. So he sat many hours in a Starbucks and pounded out, calculations and partnered with a developer and built this from the ground up. But in a nutshell, said briefly, I guess, we make customers' lives easier by simplifying the complex with technology. We have more than 34,000 professionals who rely on LeaseQuery to make better business and financial decisions for two of their largest areas of spend, leases and software subscriptions. And that is something no other provider offers in the market. We leverage AI to help businesses minimize risk, increase efficiency, and reduce costs.
And the target, like, who's the user in most cases?
Yeah, so our users range all the way up, to the CFO, the controller, all the way down to an AP clerk or a lease accountant. And I don't mean that in a despairing way. I'm just saying the range of user. Right. We used to say we were built by accountants for accountants. And while that still rings true, as our customer base continues to grow, we understand that we provide insight and value to finance, to IT, and accounting teams. We like to say we serve the office of the CFO. So, yeah. And
how about the business advisors? Or is that a customer segment for you as well?
It is. Yeah, we have more than 250 partners, and they use our software to varying degrees, and we actively engage with them on opportunities to develop. So we are well accustomed to working through the channel to deliver value to our end clients.
Okay, great. And so how do they learn more, and where can they find LeaseQuery?
Yeah, so the best way to learn anything about LeaseQuery is to visit our website. I mean, everybody has a website these days, right? Yep. LeaseQuery.com, where you can learn more about us. You can schedule a demo if you're interested. And if you want to talk to someone in the near future, we can be found at GFOA National, CSFMO, Sage Transform, ITA Spring, BDO Alliance, AICPA Engage, and currently at the Acumatica Summit. Additionally, we offer many educational CPE webinars. I know CPE is big for everyone, and virtual summits. And again, all of this is on our website and is constantly updated to bring you the most current information.
That sounds great. And I don't think you talked about what's on the roadmap, and obviously anything that you can share. Be interested to hear that, but obviously, don't talk about things you can't share.
Yeah. Right. So as it stands currently, we provide stellar lease accounting support and SaaS spend management. And we continue to investigate and talk to partners and talk to CFOs about additional ways we can support them. So what other areas of the business can we offer insight and add value? And so that's what our roadmap looks like. It is broadening the horizon and, finding other ways to support that CFO so that they can make the best informed decisions they can for their companies.
Well, that sounds great. Well, Emily, thank you so much. Thanks for taking 25 minutes or so out of your day just to share some information with us. We certainly appreciate it. It's nice to meet you, and we'll let you know when this goes live.
Sounds good. Thanks so much, Gary.
Thank you. All right. Bye. This episode of the Accounting Insiders podcast is brought to you by Out of the Box Technology. Out of the Box Technology is your partner in accounting data services. With over 7,500 industry migrations performed and an expansive network of third-party integrations, a partnership with Out of the Box will augment your advisory practice and turbocharge client accounting operations. Visit outoftheboxtechnology.com insightful-accountant to get started.